morning, everyone, and happy Monday. It is January 8th, 2024, and you're watching The War Room. I am, as you know, as everyone knows, I am AgYield's marketing manager and everyone's favorite backup host, Jack Coakley, filling in for Dan today. Before we get started, of course, we would love for you to subscribe to the AgYield YouTube channel, get all the updates from AgYield, never miss an episode of The War Room, and see all the fun stuff we're doing there. And today, we'd be happy for you to join the discussion. Like I said, this is a live program for a reason. We hope to have you be a part of our conversation, share your insights, or ask any questions you may have. With that out of the way, I will queue up a graph I got from Dustin and let him start talking. So, Dustin, take it from here.
Thanks, Jack. Yeah, so this is a chart of the COT data, Commitment to Traders report, that comes out on Friday, and it's as of the previous Tuesday's close. And it's probably a little harder to read from this screen, but what it's showing here is basically the funds are now short every product besides meal, and meal is one of the fastest changing positions towards being short as well at the same time. We've had a fairly monumental shift into the short realm for managed money in the soy complex. So in this 5-week time frame I've highlighted in red here, they sold 79,000 beans, 92,000 meal, and 45,000 oil on a net change through futures and options combined. That's like almost equivalent to 750 million bushels flipping from long to short on a net change, that is, from a 5-week period just prior to November 1st notice day. Wheat, on the other hand, we saw a 59,000 increase for SRW and a 15,000 increase for HRW. So equally opposite, massive shift out of the wheat short position and into a soybean short position. Question is, obviously this has, first of all, has had a major impact on prices, as we all know. Wheat through that same time frame has had a very good rally. Beans have had a very large sell-off. So there's no question that managed money has been a big driver of these markets. And Ben and I were talking prior to this report. Beans have actually held in there pretty well considering the size of these moves, right? The size of the shift of the short position by them. But, the big question is, are they capable? Are they willing to keep getting short? It's been a long time since they have been net short. And, we still have a lot to figure out. What was the damage in South America? There clearly was some damage. And we're going to get CONAB's numbers on Wednesday, and the USDA numbers will come out on Friday as well. So they've taken a fairly large stake in a big position into still uncertainty. They don't know how the yield's going to come out either. So this will be a very big week for the soy complex in general after the funds have made a big move. So that kind of sets the stage up for the reports we're going to get later this week.
Yeah, I think that it's really a crucial week. We know that there's a large rebalance coming this week, starting today through Friday, because of corn's overall weakness in the commodity complex. Expectations are that they're going to buy 12,000 plus contracts a day. I think that number's probably risen over the last week or so. And it's a really, this is a humongous report. We define our supply. There's, at least on paper, there's no more question marks about it. And I think the big surprise in this report, considering the price action in corn, is if there was something that was not overtly negative for the corn complex. Beans, on the other hand, I think they still have, as Dustin mentioned, some uncertainty as to where we come out after CONAB and where the USDA pegs that. So, there's still a fair amount of uncertainty on that crop. And going into after a $1.50 decline, it's something that should not be taken lightly. I think that they're going to have to give you something really bearish to continue extending beans with that uncertainty. you can put a tinfoil hat on all you like, but the reality is a lot of times our markets we top out on bullish news and we bottom out on bearish news. And going back to Dustin's comment about will they get net short soybeans, managed money doesn't think of this the way a lot of us do. It becomes very much an automated trade, and they will sell until they quit finding the path of least resistance, or something is to shock them out of that. So that certainly is a possibility. Last year into May, when things were pretty solid, and we started to see that things weren't as bad, and collectively Brazil had done okay while Argentina struggled. We still managed to get new crop beans down to 1130. So I think that there's a lot of things in front of us. Digesting this massive data drop on Friday is really important, and see where we come out of it. Seasonally, a lot of times corn likes to start finding a little bit of strength. And I think at this point, people would be happy just to see the bleed kind of stop. So it's a big week for grains. And I mentioned last week that in bear markets, the period following that January report can really kind of be doldrums for a while. So excited to see what that looks like. Price would indicate that we would get something not supportive to corn, and then watch how it reacts coming out of that kind of final stake in the ground of defining our supply. So
yeah, thanks for that, Ben. Speaking of South America, it seems like there's more beneficial precipitation going on there. John, are we seeing anything beyond that, or is it same old as we discussed last week?
Same old, same old. Thanks, Jack. Widespread rains in central Brazil over the weekend. South was a little dry, but the forecast again is extending rains throughout the week for them. So I think it's we'll just have to keep watching the maps, but yeah, it's same old, same old.
Excellent. Thank you for that. Now let's shoot it over to a guy I haven't seen in what feels like ages. Ryland, so glad that you're back. I know a lot of people have been excited to hear about what's going on with cattle and whatnot. Lots of people calling in and saying that they miss you. Mostly me under different accounts, but so happy that you're back. Let's hear a little bit about what's going on with cattle.
Sure, it's good to be back. Thanks, Jack. Yeah, it was a nice week off, but coming back, it was pretty nice to see that we actually got a little bit of a rally here back in the cattle market. We put about $2, $2.50 back on cash towards the end of the week. Packers really came after it. It looked like the slaughter was definitely bigger than expected. So I think if the bigger kills kind of persist, I think we're going to see that kind of support in the cash market for now. And from what it looks like, there's open interest really started to kind of kick up a little bit on Friday as well. So overall, I mean, the news is pretty good going into this week. I know we saw futures kind of taper up, but we're still holding technically pretty decent support at the 25-day moving average. Obviously, we're kind of struggling with the 40-day a little bit. You start to look at some of the technical trends a little bit. We're going to need to see a little bit more fundamental strength, I think, to really kind of get everybody back on the bandwagon, just considering commitment of traders. Funds are still net long 16,000 contracts, but, as of last Tuesday, they had sold about 5,800 of that. So they're still kind of cutting loose some of their length and some of their exposure. I think the market's waiting for the narrative to kind of play out here on the January 31st report. Are we going to be in this? Are we still in this cycle of contraction? Are we starting to see signs of expansion? Are we going to see rampant expansion? I mean, we'll just wait. Everybody's waiting for that data, and I don't think anybody wants to take too big of a bet and be on the wrong side of the cycle here, just from a trading standpoint. So that's really, I think, where the big shift is going to be after January. I think we're going to keep pretty close to stay pretty close to how the cash market's operating. Just weather-wise, it looks like you've got some storms in the forecast in the north and northeast. Some central regions are going to get hit pretty good this week, so it also looks like there may be a little bit of a weather premium here as well. But all things considered, the fundamental side of the market, cash, the beef, everything, seems pretty firm right now. So, in general, it just kind of feels like we've made these big moves in the beginning of the week, and then just kind of chop around that range. Maybe that's a trend that kind of continues until we really see the longer term narrative start to creep out here. As far as the hogs, we saw a lower cash market, but the futures were pretty good last week. We're still kind of dealing with the headwinds of heavy weighted hogs right now, kind of an abundance of supply. But seasonally, this is really where you start to kind of get going here. So I would say, like, after this week, I think we're going to focus a little bit more over the next 3 to 6 months pricing. So I think we can find some support, especially in the summer contract. So I think, just like from a production standpoint, if there's good forward margins out there, we start seeing prices we really like, it's usually a good time to start kind of planning for that. Whether it be to, sales targets, whether it be, LRPs, that kind of stuff. So I think it's something just to kind of keep in mind, that this is usually some of the better time for price. And as far as the funds go, they're still net short here, about 8,000 contracts. Good reason, I think, is just from a supply standpoint. But we could see that shift pretty quickly. I don't think the funds have taken a huge stand in the meats right now. I think overall they're still waiting to see how they need to lean, what kind of weight they need to have after the cattle report comes out. So that's really going to be the focus, but we've got plenty of time in between there to really make some moves. So overall, just still everything seems kind of on the friendly side, kind of going into this week here, and we'll see what the roll does. It should be very volatile this week, so we'll see how that goes.
Excellent. As Dan is famous for saying, is there any parting shots here that anyone would like to take?
Yeah, I think one thing I would definitely note here this morning is the Saudis had cut prices to Asian countries for their benchmark crude price. And that's causing a bit of a sell-off here in the energy markets, and that might be what we're feeling overnight a bit. So crude oil is down over $3 a barrel right now, down to about 70 for the lead month contract for WTI. And heating oil's down, RBOB's down. And I think that might be partly why soybean oil is also kind of leading the drive lower to start overnight. So something to kind of keep an eye on as well.
Hey, Dustin, does that tamper anything with the rebalancing with energies being down, 4 to 6%?
I think that is that a moving target, Ben, or do you think that their numbers are already set coming into this period?
They move them up to a certain point and then they stop. My guess that any switches at this point would be very minimal.
Yeah, I would think they have a plan for these 4 or 5 business days that they rebalance coming into this time frame, and they stick to that plan because their own weight is probably changing those prices a little bit as well. So,
well, and they should also be buyers of energy products in general. So I think that the impact there will be minimal.
Yeah, it's a good question though. But yeah, that rebalance, I know we talked about it a little bit, but corn is definitely suppressed. And managed money, not index funds, but managed money is almost short. I mean, they're perceived to be short about 1 billion bushels of corn right now. It's kind of a counter-seasonal time to be short that much corn. So it's kind of interesting to see. We come into a time frame. Maybe this report gives us a little bit of surprise here at the end of this week on Friday, or we get into the second season of Brazil without a great start. If something happens along those lines, that's a big position to be in. And we've seen the last couple of years where the funds have kind of gotten ahead of their skis a little bit and had to bail out. More recently with wheat, anything that changes for corn is just a good reminder of the setup that they are extremely short into a counter-seasonal time frame.
Well, and I think to that, one last thing I would add is, a lot of that trade gets automated, looking at different moving averages and things like that. And we're drawing those closer and lower every single day. So that motivation to potentially exit is still there. It doesn't mean that it's sustainable or we can extend tremendously beyond those levels, but it would create opportunity to step in on and make some decisions.
Yeah, looks like we just hit the open, so I'm going to shoot it back over to Dustin to get those numbers. How about it, Dustin?
Yeah, sounds good. So yeah, as of right this moment here, we got March corn down 2 at 458 3/4. So that's the first time March has been printing in the 450s. March beans are down 15 at 1241 1/4, and March wheat is down 16 at $6 even.
Great, thanks for that, Dustin. As always, we are streaming live on YouTube, Facebook, and X. Be sure to subscribe to the YouTube channel to help us out with the YouTube algorithm and also get updates anytime you can. And hope everyone has a great week. We'll be talking to you same time, same place tomorrow morning. Have a great day, everyone.
Thanks, Jack.
Thanks, Jack.